right. Well, greetings and welcome to the Sovereign Lounge here. We have your host, Round the World Man, and Yamin Fauzi here again to bring you some more news, insights, and analysis from the world of investment migration and citizenship by investment. Now, Yamin, from what I understand, there's been some changes in the Australia capital gains tax situation. This is kind of a new development. Let's go ahead and dive right in and see what's been happening here in Australia.
Yeah, so correct. We got some news here just from this week, actually. I'm gonna quickly go over the browser so you guys can see it. Um, so yeah, from Alex Ricoso, he's the founder of Citizen X. He posted this on his X account where it says, just in Aussie unrealized gains tax. The Australian Labor government proposes a new tax on unrealized capital gains. Unrealized capital gains. So um, maybe to give a little bit of an explanation here, what does it mean, unrealized capital gains tax? So let's say you have hold stocks for about maybe $500,000 US. You have stocks of $500,000, and these stocks have appreciated in value in the couple of last years. So maybe now it is worth 600,000, just to give a very, very basic understanding of it. So, and what the Australian government wants to do is now they want to tax the unrealized 100,000 wealth gain. Even though you haven't sold any shares, it will be taxed, or that's what they want to propose at the end of the day. So the tax will apply to everything, including your family home, potentially forcing you to sell. So, and he says, I've been warning to you, modern feudalism is coming to the West. And attached to it is the screenshot from the Australian, where it says, the unrealized gains tax has been carefully designed by Treasury so it can be extended to all investment assets and maybe one day to the family home. And this is a very like weird and modern phenomenon. Maybe you have seen it as well in the couple of last years, where some left-wing governments and parties, what they try to do is they want to tax like unrealized gains. I mean, Joe Biden has proposed this last year when he still was in office to put on some unrealized capital gains tax. So, which is ridiculous, you know? I mean, people they hold on to these assets. They're not selling it. They do not make effective profit on it, but they still want to go after this. And I don't know. It seems to be like a really weird trend going on with these leftist parties all over the West, basically, to enforce these laws or trying to enforce these laws.
Now, Yamin, a
Um,
quick follow-up question here right now. This is obviously a breaking development. I haven't had a chance to review this in depth just yet. I want to get some clarity from you. Has this change been proposed, or has this now taken effect, or is it somewhere like where is it actually in the life cycle of actual law versus proposal?
well, as of now, it's only a proposal, so it's not really enforced in any way, or it hasn't been approved. Um, so yeah, it still has to be it has to be passed by the Senate in order to effectively enforced. But what I yeah, I mean, it's there's like the sentiment that the rich have to pay their fair share, and they come after capital gains because most wealthy people they don't have like this sort of like traditional income that the middle class has. So usually wealthy people they have assets or business generating income for them or value for them, and then they can sell off shares, they can sell off investments, or they can hedge with loans. And traditionally, capital gains have been not that high, like income taxes in other countries. Um, but still, at this point, it's still a very like proposal. I hope it doesn't get through, but well, you never know what's happening there. Essentially, if the left has too much stronghold in these countries, then they they will pass it on, and then yeah, they come even after family homes. So
All right,
yeah,
so
and
Would you say this has a high possibility of going through then? Because we're still in the realm of speculation, and just to all of our viewers out there, I just want to
Correct. Yeah.
highlight that we're still actually in the realm of speculation here. But as we saw during the COVID times, for lack of a better term, at the moment, Australia was obviously in some places was rather extreme. It seems like this might actually have a possibility of going through. I'd love to hear your thoughts if you think that's actually a high possibility, or if there's going to be some changes before something similar to this goes through. What's your opinion there?
Well, they specifically made it a little bit vague so it can be extended, What usually left-wing parties do is that they always go for the rich people, the wealthy people, because again, like as I mentioned before, it's usually like the rich have to pay their fair share, because obviously most of the people they're working so hard that they have the burden of all these taxes. But at the end of the day, when you look at the statistics, you will see that the rich pay a lot of their fair share, to be honest, and sometimes even more, because they get taxed on very significant issues. I mean, business income taxes, regular income taxes, capital gains taxes, sales tax. There is so much adding up. I'm not like personally, I'm not really a fan of taxing everything, including and especially inheritance tax. This is my this is my absolute hate point. Also kind of a little bit controversial.
Right, right.
Um,
So what you're getting at there
yeah,
is that in many situations, they're making it increasingly more, painful to be an entrepreneur or a business owner, and making it, if you're able to generate revenue for yourself, or maybe you have employees, contractors. It's one thing to make it more painful in the present day, but as far as the multi generational concepts of being able to pass things down to maybe say children, that becomes, yeah, that's another, that makes it even more painful in that situation when you talk about inheritance tax. So I see what you're getting at there.
yeah. I mean, in Switzerland, this has been proposed all the time. There is a. I've been recently featured on IMI Daily regarding this issue, where in Switzerland they try to tax um, like the rich again with their inheritance a lot more. Um, so they also want to lock them in the country, before they can essentially leave, with their wealth. But it scares the people off, And I mean, here in Switzerland, to be honest, it has been a fringe minority party, it's the U, so it's called, the Young Socialists. And I don't think they have a chance to win this over because they failed so many times and they will not do this again as well.
Well,
So yeah, but you can see the sentiment all over the place that they want rich people to pay their fair share. And to be honest, I don't think it's fair. At the end of the day, it will affect family home owners, and family home owners are the middle class, and if you're forced to sell your home, where does the money go? Again, to those who have the money to buy the assets in the first place,
right,
and so
right.
it's totally backfiring this, and I'm not sure if they have a chance, I mean, but the sentiment is there, there is like some sort of sentiment that keeps on going, maybe this one doesn't work, but maybe after we have 10 proposals, the 10th will go through. And this is why you should never give an inch to these people.
Right. Well, not to jump out of Australia too quickly, but since we are in the Sovereign Lounge, we have a lot of places to cover. The world is big. You do need to grab a seat somewhere. I want to actually jump into a recent development in Switzerland, since you just mentioned the Swiss Youth Party there a moment ago. I think there's been some changes in like lump sum taxes there. Can you actually give me a quick, kind of introduction or update on what's happening with the Swiss lump sum tax situation? There's been some changes.
Yeah, sure. But first, I want to show you like this little graph here.
Oh, absolutely.
Or yeah, because we were talking about capital gains tax.
Absolutely. This is a great
The world
graphic.
is yeah, and Switzerland is included here, by the way. Switzerland does not have capital gains tax. So it's one of these countries where you have very low taxes in general. I mean, you can also see other places like Monaco, the United Arab Emirates, which is very well known for it, Singapore, Malaysia, Liechtenstein, even the Netherlands, and like some of the most known contenders in the RCBI space, St. Kitts and Nevis, Bahamas, and other of the Caribbean countries. But you have mentioned it, so now we're going to go over a report of IMI Daily, and this is well, it's actually data from the Swiss State Secretariat for Migration. They have published here information from how many lump sum tax residents are. And the largest group is the Russian group. No surprise here. But you know what? So I have to dive in a little bit here when it comes to Swiss lump sum taxes. So Switzerland has this tax code law, which is called Aufwandsbesteuerung. This means that they tax you on the amount of, well, Aufwand, how much basically of work they have to do, or in any sense, like how much you actually are worth, in terms of net worth. And each canton can have a threshold. So the lowest threshold canton is Obwalden, which is like, for those who don't know, I'm going to quickly show the map here, which is like here. Here. There you go.
All right. So that's
It's like
actually
very in
yeah,
this.
yeah, very close to Liechtenstein.
No, Liechtenstein is a bit farther away. So
Is it?
it's literally in the center.
Ah,
Yeah,
okay, okay. I saw Liechtenstein on your map
maybe I
there a moment
should.
ago.
Yeah, maybe this one is a bit
Ah,
better
yeah,
because it
that's maybe a little
shows
bit better. Ah, I see now. Yeah, Liechtenstein is
the
a little bit farther
political.
away. Right, right, right.
Yeah. So it's like in the geographic center of Switzerland, basically. There's this small town Lungen, which is like a very picturesque. You see it sometimes on Instagram. Maybe you can see it. I'm not sure. But anyway, so it's a very like tiny canton. There's not much really to do except for hiking and spending time. There's an excellent shooting range, by the way, there.
And this canton, tell me how this correlates to this data in this report. Tell me how
Yeah,
that bring that together for me now. How does that correlating?
yeah. So you see, well, first of all, what the data says is like how many people are using this like scheme, this lump sum scheme. So you have the Russians with 19%, China, the UK, some of them from the US. But we have to talk about a group of 596 individuals or well, residents that can include also their families, essentially. So it's not that many people, you know. Again, like Obwalden has like 5%. You can see it here on this graph here. Oh yeah, here it's much better. So yeah,
Right,
Obwalden
right,
right here with
right.
26, even though it's like a very ridiculously small canton. Um, but the most you can find here is Geneva, and no surprise here because Geneva is well, it's a very international city, very like global because there are all these headquarters. There is the United Nations, there's the WHO, um,
Well,
the CERN.
CERN. I was just going to say CERN. I believe
Yeah,
is the closest kind of
yeah.
major city, or
Well,
CERN is close to
project.
Geneva, should I
Yeah,
say? Yeah.
yeah, yeah. And well, that makes it a very valuable destination. Also Ticino, southern Switzerland, which is the only uh, Italian-speaking, fully Italian-speaking canton of Switzerland. No surprise here as well because you have the Mediterranean vibe, but also like the Swiss efficiency at the same time. Zug, very popular destination. I literally just have been last week to Zug, working on I mean, Zug is known for Crypto Valley, and it's funny. You don't see many people in Zurich. You would think about why Zurich, even though it's like the most populous canton, only has 12 lump sum tax residents. To answer here is they have abolished it. Um, they have abolished the lump sum taxation a couple of years ago. Um, yeah, because we have voted on it. We held a referendum, and people voted against it you know. And since there are many left-wing people living in the city of Zurich, which has the highest voter base, they abolished the principle.
Now, when you say
Again, here,
we, I want to pause there. When you say we, are you a resident of the Zurich canton?
back then I was a resident. Well, it was a referendum in 2009, so I was 19, so I was not eligible to vote back
I
then.
see.
So yeah, but important to notice they have still 12 lump sum tax resident. Why is that? Because these people they grandfathered into the system.
Ah,
And this is a very important point that I overall make for people who who want to live a sovereign life, Once you have grandfathered into a system, it's much easier to keep your status than, to try to get in, You can see it with many other programs in the world, with stuff that doesn't exist anymore, or you have preferential treatment back then. Now it got abolished, and this is why I keep telling people if you have the resources, invest into invest into the programs, invest into the schemes that are offering to you. If you have the resources, don't wait too long because when it's closed, it's closed. You see, after these 12 tax residents, there are no more in Zurich, and I doubt it will come back, to be honest, because
all right. So these people got into that program early. What happened to be, or sorry, they got not early necessarily, but they got into the lump sum tax program in the Zurich canton. Why it was actually a thing years ago, and have just maintained that status.
correct, yeah.
And there's probably at the time of this data collection here, there's 12, but if we go back like even 5 years, there was probably a few more. Some of these people might have passed on or decided to give up their Zurich canton tax residency and maybe in a different country or in a different canton, but many of them just stayed there. And so yes, I agree that getting in early is often, or conceptually getting in early is often, and we've covered this in our previous episode, that there's sometimes major benefits to getting into these things while they're available. Which for the sake of our viewers, we're not necessarily trying to, always give you that sense of FOMO, but in many situations, yeah, it's the truth. It's a legitimate, things go away. So it is
I mean,
better to
look,
get in.
if you're yeah, if you're not a millionaire or a high net worth individual who makes this sort of amount where it makes sense, what can you do?
Right.
It doesn't make sense. You shouldn't, uh, you know, overshoot your target, I would say. I'm not sure if that's the best term. English is not my native language, so apologies.
Right.
So,
Right.
but so it's like, okay, well, you can only do so much that you're capable of,
Right.
But I say to people who have the resources, if you have the resources, but you're waiting on because maybe you want to find a better deal, or you feel like you're a little bit too distracted now. I say, look, make it a priority if it's something that really is that you want, because some things are not going to be there forever. You
Right.
see, like in this graph, you can see like a total of four cantons have abolished it. No, actually five. Appenzell, Zurich, Schaffhausen, Basel, Land, and Basel City. And also in Basel, there's also some grandfathered cases, four of them. Um, they're just vibing there with their lump sum taxes,
Right.
basically.
Right.
Yeah, it even says it here in the article. The 12 individuals still registered in Zurich and four in Basel represent the grandfathered cases. This allows individuals who already held lump sum tax status before the abolition to maintain the preferential agreement. Yeah, so, and also a little bit for you guys to understand, Switzerland has is like, in a political sense, very close to the United States. So we have laws regarding um, cantonal level and federal level as well. So yeah, the same principle applies here. And just to dive in a little bit more, so each canton has different thresholds. Zurich used to have a threshold of 1 million Swiss francs annually that you needed to pay in taxes in order to have this lump sum tax regime. obviously 1 million, you need to make about 10 million Swiss francs per year to justify paying this much taxes and get some sort of benefit, you know. So we're talking about high net worth to ultra high net worth individual levels. I mean, if you go to Obwald, then it reduces to 250,000 Swiss francs per year, so it's much lower. And I found this document here from the canton of Zug, also known as Crypto Valley, um, where it says the minimum is 500,000 Swiss francs by the canton. So even the canton itself can say, well, it says 500,000, but oh, you earn maybe 70 million per year, so now you're going to pay 700,000 Swiss francs per year, etc. So yeah, so this is about Swiss lump sum taxes here.
Well, yeah, I mean, it's actually a really interesting report that you've found recently. So I appreciate you sharing that here in the Sovereign Lounge. The thing about Zug, though, one of the things I thought is pretty low population canton comparative to some of the others, is from what I understand. But it seems to be the most friendly when it comes to a lot of these topics on whether it's Bitcoin or for some of those other people like cryptocurrency. Would you agree with that analysis, or what's the status with Zug there?
Well, Zug is known in Switzerland to be our Swiss tax haven because they have the lowest corporate tax rates and personal income tax rates. And it's also very crypto friendly, as you mentioned. You can pay taxes in Bitcoin in Switzerland. And also, when you incorporate an LLC or an Inc., in Switzerland, we call them GmbH and AG. You can use cryptocurrencies as a collateral, like USDC, Bitcoin, Ethereum, and other well, designated cryptocurrencies. So there is a lot of incentives, you know, to invest in these new technologies there, and the canton is prepared for it. Absolutely.
Yeah, that's fascinating about Zug, how they're so open to this. I love to see it, and I won't be surprised if other cantons start moving that direction in Switzerland just to compete. So I appreciate that detail.
Yeah, and also Zug is very pretty. I've been there last week. I frequently visited every year. Sometimes I go to a co-working space. It feels very international. It has like this very high vibe energy that you don't get in most Swiss cities. So this is just like a side note for the end of
Right,
this
right.
episode, I
No,
guess.
no, I appreciate it. Yeah, yeah.
Yeah.
Well, we got new all time highs in Bitcoin to USD. So I won't be surprised that you're going to be spending some more time in Zug in the near future, seeing what's happening. I'm sure there's going to be some developments in this space. So listen, this has
Yeah,
been
absolutely.
yeah, yeah. I mean,
So
yeah.
like for as of the recording as of today, we are at 110,000 US dollar per Bitcoin. So now is the best time to do some moves.
Absolutely, absolutely. Well, listen, Yamin, your insights and analysis are always appreciated here in the Sovereign Lounge. This has been another fantastic episode. Thanks for tuning in, everyone. We'll catch you next time here.